Hey, good afternoon, everybody. Well, welcome to our 233rd recording of the Canadian Association for the Club of Rome. Well, I'm very delighted today to be able to welcome Julie Segal as a speaker for us, and she has a very impressive biography, as you all have seen in the send around. But to summarize, she's still studying, if I got that right. She's a visiting fellow at the Research Institute of the London School of Economics. But I know her because she's been supportive of the Canadian Aligned Finance Act and Senator Galvez. And she has been recognized both nationally and globally for her environmental work. And we're very lucky to have her as our speaker today. She's going to be a star. Julie, take it away.
Great, Richard. Thanks so much for that introduction, and to the Canadian Association of the Club of Rome for the welcome for this presentation. It's good to be discussing an important subject with you that branches a couple of different subjects. We're talking about climate-related financial policy. Richard mentioned an example of this called the Climate Aligned Finance Act in Canada, and we'll get a lot more into the details of that. First of all, climate finance policy isn't necessarily something that people put together all of the time, but if we're thinking about how to address climate change, how to build an economy in our country that actually works in the best interest of all of us as people, then thinking about the policy tools to do that are incredibly important and exciting. So I work with Environmental Defence Canada. I lead a program there to advance climate-related financial policy, as well as doing work with the London School of Economics as visiting fellow, as Richard had mentioned. And before my work on policy, I did work in sustainable investing and then moved to the climate policy side of things. What we'll talk about today, we'll cover, first of all, a bit of the scene setting on what is climate-related financial policy, where is Canada positioned, both in terms of the policy that we have and where our financial institutions sit, talk about some of the problems and solutions that exist in Canada. Overall, though, let's start with some ground setting here. As I said, not everyone thinks about climate finance and policy all in the same bucket. Maybe two of those things, not always three. Let's start with the basics. Our financial institutions are the banks, where we put our money, pension funds, which are managing our retirement savings and pensions, and insurers, which we interact with in a variety of ways. All of them manage money, in many cases, on our behalf and make investment decisions which tangibly shape our economy and society. So if an investor is putting capital into a piece of infrastructure, like a building, that has a real effect on the society that we exist in. And of course, that has a real effect on emissions and therefore the severity of climate change. Policy has long existed to guide and supervise the financial sector. This is called financial regulation or supervision. And this is an important part of general public policy. It helps navigate and determine how the financial sector engages with our society. Often financial policy or supervision is looked at in terms of maintaining market stability or consumer protection. I think when financial policy was on most people's minds was probably after financial crashes like 2008, 2009, for example. Financial regulation increased. At other points in society's history, it has kind of ebbed and flowed, but in general, it mediates the relationship and is a very important part of public policy, as we'll talk about today. Canada is internationally quite respected for having strong financial policy, again, particularly after the 2008-2009 financial crisis, but we currently lack rules related to how financial institutions contribute to climate change. Policy aside, Canadian financial institutions, our banks, pension funds, and insurers, are some of the globally largest investors in oil, gas, and coal, which are, of course, factually the largest contributors to climate change. And they also statistically underinvest in clean energy. So where capital is going from Canadian financial institutions does relate to the policy environment that they exist in. So here today, we're talking about all of that, as well as some of the solutions. And believe it or not, that was all just the introduction in terms of setting the scene. What is financial policy? Why is it important? How does it relate to climate change? Well, it does quite closely. Again, financial policy are the rules which governments set to guide and oversee the private financial sector. Damages from climate change cause significant economic and financial risk. Regulators are often tasked, supervisors in finance are often tasked with looking at the risks to the financial system or maintaining the stability of the financial system. So the fact that wildfires, floods, climate volatility affects financial stability is something that very clearly regulators should be thinking about and have been thinking about for a number of years. That's the risk perspective of climate and finance. There's also the impact perspective. Investments from financial institutions in general still contribute to our economy, which is polluting and therefore making climate change worse. And that needs to shift. Money needs to shift out of polluting investments and to make space for it to invest in climate solutions. And we've seen a number of policies in Canada and globally that encourage our economy to shift from polluting industries to climate solutions, but that doesn't yet exist for the financial sector here. Policy proposals do exist to align Canada's financial system with climate action, but at the federal level, there hasn't really yet been meaningful progress to align those investments with climate action. Now, we'll do a bit of a breakdown of how financial regulation and supervision works in Canada. As Canada is a federation with different provinces as well as the federal level, I like to talk about our financial regulatory and supervision environment as a bit of a jigsaw puzzle. So everything kind of fits together, but there are many different pieces. And this is because each province, in many cases, has a role in financial regulation and supervision. At the federal level, let's talk a bit about by institution to maybe make it more fun for folks. So our big banks, most people bank with one of the big five: RBC, Scotiabank, CIBC, TD, etc. Those are regulated by the federal government under an organization named OSFI, Office of Superintendent of Financial Institutions. So they are the primary regulator for a lot of the big financial institutions in Canada, including our big banks, large insurance companies, federally regulated pensions. And so they have a very big role in our financial sector. OSFI has done some work to talk about how financial institutions should be thinking about their climate risks, but not yet in terms of reflecting on how investments can make climate change worse, which then make the risk worse for people and the economy. Our pension funds most of the big ones have their own legislation that they were created by. And so this means that they're all governed a little bit differently. And then also a lot of the other pensions are simply overseen provincially. Similarly, securities are overseen provincially, which is essentially what you might be trading on the stock market. So all of that was some perhaps nerdy detail, which I think is a really important foundation in terms of when we're talking about climate-aligned financial policy and the solutions that we can bring forward to advance a financial sector and economy that's actually working for a more sustainable society and climate action. There are a lot of different jigsaw pieces that are important to think about and that one would have to contend with. Where are we at in Canada on climate-aligned finance policy? How is our financial system affecting and affected by climate change? So here we're going to talk about first how it's affecting climate change. Canadian banks are among the most significant investors in oil, gas, and coal globally. research is done every year to track how the world's largest banks are investing in fossil fuels relative to clean energy. Particularly the Royal Bank of Canada, which is our largest bank, in previous years has been the largest financier of fossil fuels globally. That means that the funds that Canadians are putting into these banks are being used in different ways to advance continued fossil fuel expansion and infrastructure and production, which of course is not aligned with climate action. So I named one bank that's the largest, but just about all of Canadian financial institutions are recognized as outliers in continuing to finance oil, gas, and coal disproportionate to other global investors. Similarly, our banks are statistically underinvesting in clean energy. This is, I think, a really interesting piece to think about too, in terms of not just are you moving money out of pollution, but to what extent are you financing climate solutions that we so desperately need? Again, Canadian banks in particular are underperforming on this. So for example, on average, our banks invest less than $1 in clean energy for every dollar that they're investing in fossil fuels. That should be $6 in clean energy for every $1 in fossil fuels. So right now it's less than 1x in clean relative to polluting. And that should be 6 times more in clean than polluting. Our banks, again, are among some of the world's worst when you consider how they perform relative to other institutions globally. And again, this means that our financial institutions are contributing to an economy that is worsening climate change with these investment decisions and financing decisions. But then also that our financial system is exposed to a lot of risk as the world is moving to cleaner energy sources, and that Canadian financial institutions aren't necessarily making the decisions to lead in moving our economy towards those climate solutions. There has been some support shown in the past year for climate issues from Canadian investors, where it has increased year over year. But of course, some of the data I just outlined about where money is actually going to shows that there's a lot more room to grow. So that's about how financial institutions are contributing to climate change or climate action. And we've seen it's more of the former. Let's also consider the risks to our economy and financial system from moving too slowly on climate change. And this has the potential to be enormously disruptive. Climate action is important because of the places that we care about, the world that we want to preserve, the communities and people who it affects, both our neighbors and globally. And it's also going to have significant economic damage, and it already has had significant economic damage. Last year in Canada, insurable losses were over $8 billion. In previous years, it was over $3 billion, and that was a huge number for those previous years. What do I mean by insurable damage? So this is tracked by the Insurance Bureau of Canada, where they see what amount of claims have been put in due to climate-related natural disasters. And you'll notice that these are insurable damages. So this doesn't mean that climate change cost only $8 billion in Canada last year. That's just what was insured. Think about an individual, maybe, who doesn't have insurance, and the damages that they experienced makes this number even higher. So this is specifically the cost of climate-related damages from extreme weather events due to climate change. And I want to explain this a little bit more because it really is so concrete in terms of how climate change is making weather and climate more volatile, and then that affects our economic system and our stability in so many different ways. So $8 billion in insurable damages last year in 2024, about $7 billion of that was from just 4 significant climate-related disasters. You may recall over the summer there was flooding in Toronto and in Quebec, and devastating wildfires in Jasper and in Calgary. Those 4 events cost billions of dollars in addition to the land-based and emotional-based costs that they cost for communities and the nature in those areas. So climate change caused those extreme weather events and created significant cost to our economic system. That's from the physical damages of climate change. There's also what we call the climate transition. So as the world is shifting to clean energy, which we continue to do, for example, most of the leadership on solar installation, for example, has happened in Asian economies. So regardless of any ebbs and flows in Western economies, there's still significant momentum and inevitability of clean energy growth over oil, gas, and coal. And due to that climate transition of either policy shifting or economic shifting in consumer prices shifting towards clean energy, estimates show that over $100 billion of Canadian assets are at risk of becoming obsolete, or what's known as stranded, over the next decade due to the climate transition and due to Canadian investors moving too slowly on what is an inevitable transition at this point. Now let's get to the policy. There's huge risks to and from the financial system when it comes to climate change. That is particularly acute in Canada and hasn't yet really been contended with. How are others approaching these risks, this two-directional risk, let's call it? They're moving ahead. The global state of climate-related financial policy has pointed to progress. Europe, I'm pointing to some of the areas that are considered Canada's main partners, competitors, trading partners. Europe has led on climate-related financial policy for years. They have nearly a full platform, and financial alignment with climate action was a formal part of Europe's Green New Deal. So the Green Deal in Europe included considerations of the financial sector, recognizing that we can only succeed on climate commitments and climate progress if the financial sector is aligning with those, because of course those investments shape our economy. So I'm pointing to one aspect here, a particular policy in Europe, but they have a real host of these in terms of getting not only the right information for investors, but moving beyond just information to saying, what action are you taking to align your investments with climate action? Often the first step that we see in conversation and what we've started to see in Canada so far is some talk about just getting the right information about climate risks into the market. But in Europe, they've already moved beyond that to thinking about, okay, what is the impact that you are having? And how do we ensure that it's moving in the same direction as our general public policy towards climate action? Similarly, in the United Kingdom, they committed back in 2021, which is a while ago now that we're sitting in January or in February 2025, they committed to become the first net zero financial center and have made huge progress to that, including the last government committing to require climate action plans from financial institutions to help keep warming below 1.5 degrees, which is what was committed to in global climate commitments in the Paris Agreement. And this one may surprise you about US progress, even moving further ahead than in Canada. Of course, at the federal level, that hasn't been moving forward at the same pace as Europe or the UK and the US. But a lot of states have moved forward with climate-aligned and climate-related financial policy that takes them ahead of where a lot of the provinces or federal level is in Canada, frankly. So we talked about, in Canada, you'll recall our jigsaw puzzle of financial regulators. The federal government and federal regulators have a lot of different levers, but there are a number of provincial levers too. Similarly, in the United States, a number of the states engage on climate-related financial policy. So for example, California introduced a climate related reporting initiative And other states like New York, New Jersey, Colorado, Illinois are moving ahead with that. So we've talked about the EU moving ahead, UK moving ahead, most of the largest economies in the US moving ahead, which means a number of international Canadian businesses, as many of them are, will have a hard time navigating a way to avoid these climate-related financial policies. And Canada's pretty remiss to not be moving forward with our own. This is the evident direction of travel internationally, as well as being important for that, dual direction risk that we talked about earlier. Now let's connect climate-related financial policy to the rest of Canadian climate policy and our economy. As I said, finance is not so distinct from what's called the real economy in the sense of the investments that are being made by financial institutions, the financial decisions they're making, have significant impacts on the economy that we build. The investments of today build our economy of tomorrow quite clearly. This graph is a demonstration of Canada's historical carbon emissions and projected carbon emissions. So you can see under that black line that our emissions have remained quite high. We have a target to reduce our our national carbon footprint by 40 to 45% by 2030. We're one of the worst performing emission reduction countries in the G7. You can see we had a dip during COVID, but our emissions were still quite high. A number of plans have been put in place by the government, by the federal government, to reduce emissions in different of our highest polluting sectors, like transportation, like the oil and gas sector, or in buildings and infrastructure. So a lot of those policies have been thought through and moved forward. Still a lot of work to be done there, but the missing piece to reduce our emissions has been attention to the financial sector. This is an area where the government has not moved forward in any meaningful way, climate-related policy for the financial sector. And it's a significant missing piece in terms of getting our emissions down to where they need to be. And of course, we're looking at a graph and we're thinking about, okay, what spot do we need to get that line down to? But we all know, as we talked about, from the damages that climate change causes, the very significant impacts of missing those targets. It's not something so ambiguous as a target, but something very real in terms of how do we tackle the huge problems and make life more stable for people across the country. And a big missing piece of that is climate-related financial policy in Canada. Luckily, we have some solutions that we can look to. Climate-related financial policy proposals exist in Canada. One of the most significant, which I've had the pleasure of working on quite closely, is the Climate Aligned Financial Act. This was introduced by Senator Rosa Galvez at the federal level in the Senate years ago, and it has received a significant amount of enthusiasm and attention in terms of the detail of how we could actually align our financial system with climate action. You'll recall we talked about the approaches of either shifting investments and encouraging them to align with climate commitments relative to just getting more information out into the marketplace. And so this would really do both. It would ensure that there's the right information to make smart decisions that help reduce emissions and build climate solutions. And overall, I think the core piece is modernize our financial system, our financial supervisors, to think about and deal with the current problems that climate change poses to our economy, people, and financial sector. This policy has been working through the Senate for a few years, and it's now the formal word, with Parliament prorogued as it was paused in Canada recently. It would have to be reintroduced under the next Parliament, and I'm sure there will be a lot of support for that from a number of individuals tuning in to see that brought forward perhaps by parties through the next election cycle and by politicians and parliamentarians as we move forward. So Senator Rosa Galvez's Climate Aligned Finance Act has really helped bring a roadmap and a lifeline to how we could align our financial system with our climate commitments here in Canada. I'm also highlighting a roadmap to a sustainable financial system with which my organization co-authored with a couple of others, which highlighted proposals, very similar to the Climate Aligned Finance Act, and thinking about how can we help bring resilience to our financial sector and modernize it to deal with the challenges of climate change. So I wanted to save quite a bit of time for a discussion with everyone to talk about the areas of greatest interest on this. But I'll close with just kind of a quick summary of where we've gone. And it was good to end on some of the solutions that we have in Canada that can drive us forward to a modernized, more sustainable financial system. So sustainable investing is still quite new for financial institutions. If you think about it, this has risen just in the past couple of years or decade at best. But exceeding 1.5 degrees of warming would make things much, much harder. So it's an important area to move quickly on to shift investments out of polluting areas and into climate solutions. A lot of the institutions or banks, pension funds, insurers have voluntarily said that they'll reduce emissions by setting net zero targets, but they haven't really taken the required short-term actions. And as I said, sure, that's a quick hill to climb. But as we're seeing with the climate damages we're already experiencing, it's a very necessary one. Climate risks are growing in Canada, and the best way to reduce those harms is to invest in a way that helps reduce the severity of climate change. One piece that I haven't put up here as well is that, public policy exists for a reason and financial policy exists for a reason, and having more democratic accountability over our financial institutions is incredibly important. Financial institutions, many of them are designed to think in short-term, quarter-by-quarter profit decisions, whereas what we need to think about with climate action is the longer-term horizon, the longer-term risks. And if our government is moving ahead with policies on climate action, but that's not existing in the financial sector, it's a really clear sign that we need more democratic accountability to fix that horizon mismatch and actually ensure that our economy is working in the best interest of people. And then lastly, other countries and jurisdictions have implemented climate-aligned financial policy. We have the proposals here in Canada, but have not yet implemented them, and we're certainly ripe to do so. So I'll leave it there in terms of the presentation, and very glad to go into your questions and discussion.
Okay, thank you, Julie. That's great. I have a long list of questions already, but I'll be as moderator. I'll ask the first couple. First thing is trying to convince people of adopting a new policy. How much have you also? There's the economic cost, but there's also the health costs, and I'm wondering how much have you addressed that with the people who have potentially a lot to gain. Either that's both the population, but also the people who are having to pay the dollars, like as you've pointed out so nicely, the the insurance companies and so forth. Have you brought that up, and how much have they bought into that? I mean, really trying to convince people of adopting a new policy and where the pros and the cons are and so forth. How much have you pursued that, Ali?
In terms of the support for the new policy, the Climate Aligned Finance Act has had a really incredible support, which I think is an indication of support for modernizing our financial system in general. So this has, you've seen over 120 of the leading Canadian environmental sustainable investment organizations supporting this type of policy, including many health ones, as well as dozens of individuals, and I think dozens is far too modest, of individuals and academics. The health perspective is really interesting, and particularly when it comes to insurance. People often refer to insurance companies as being affected by climate change on both sides of the balance sheet. So what that means is that an insurance company is liable to pay out on claims when there is damages that experience. So if there's a flood, if there's a climate-related health risk, as I think you were alluding to, Richard, that creates something that the insurance company then has to pay out. And something that folks may not think about too often is how the insurance company has all that money in reserve. Well, of course, the insurance company is investing that in places. And insurance companies have been shown to still have significant investments in oil, gas, and coal, which is contributing to making climate change worse and then creating bigger risks for them as an institution in terms of the payouts they have to do for those damages. So insurance companies would be, very natural actors in terms of longer term and dual interest in mitigating climate change. So I think that's a really interesting example to touch to as well.
Sure. Okay, Dave Doherty, you had a question. Two, actually.
Okay, thank you, Richard. Yeah, I've got two questions.
And
I'll ask
Claude,
them
you're on deck.
separate.
Sorry. Yeah.
I'll ask them separately and allow an answer in between. What do you make of all of the big banks in Canada pulling back from climate action within the last month or so?
What you're referencing is, I think, Canada's big banks have left an international net zero commitment. So
Right.
this was part of what was called the Net Zero Banking Alliance. They all of our big banks committed to joining this group and reducing their financed emissions to net zero. So the investments that they're making, to carbon neutral by 2050. What I would say is that over that time, they were still investing significantly in polluting industries and underinvesting in clean energy. So we hadn't seen those lofty commitments make their way into business strategy or investment decisions, which is what's really important, of course. It's not about what you commit to, but the actions that you're taking to deliver on those. That's what the atmosphere cares about, right? With banks leaving this net zero group, it almost brings a bit more honesty to the direction of where money has been allocated. If the banks begin to allocate capital to clean energy solutions and stop financing the causes of climate change, it doesn't really matter whether they're part of an international group or not.
So the practicality of it is it doesn't really change much. They weren't doing anything, and now that they've dropped their commitments, it doesn't matter.
Exactly. The commitment is a bit fickle, let's say, but it's simply being a bit more honest about the lack of activity that's been demonstrated to date.
Okay. So the second question is this one. I suppose I could say the insanity going on in the international community as a result of the new administration in the United States is mind-boggling. When do you expect Canada will be attacked, as the UK was yesterday, for its climate stabilization policies? The US Energy Secretary said that the UK was sinister in its plan to get to net zero.
I saw that.
Canada has certainly been attacked, and what many would say is betrayed by our geographical neighbor. What I would hope to see from parliamentarians would be a smart response to make sure that Canada is secure in moving ahead with what we need to do on climate action. So, for example, focusing on making sure that our industries are reducing emissions, being held accountable to reduce emissions. And many have suggested implementing a border adjustment, a kind of climate-related tariff to ensure that companies that are not reducing their emissions sufficiently have to pay for that externality they're creating, whereas those that are doing the hard work within Canada, based on our stronger policies that we hope to see move forward, will get the credit from that economically. So it's less about, how do we respond to volatility that may or may not come in terms of verbal jabs across the border, but how do we make sure that our economy is secure and doing the right things that we need to do? And I think that's true whether it's for traditional economic tariffs or for climate related, insults. Just making sure that our economy is moving in the direction that it needs to and doing what it needs to for Canadians. And that means kind of sticking our ground on knowing what makes sense for Canada. That includes climate action.
Great, thank you very much.
Good. Okay, Claude, you're up next. And then after that, Barry, you're on deck.
Okay, my question actually referred to the NGFS, the Network for Greening the Financial System. This is another organization that the Trump administration recently has withdrawn the US from. And in my written question, I actually referred to it as a G20 organization. I'm not sure that's entirely true, but the NGFS website actually said that they were created, that it came out of the G20 2016 Green Study Group. So as a discouraged world federalist myself, I follow this quite a bit. And the evidence that I see is that things are actually not coming together for greater internal or international law and greater cooperation on the financial side of things. We seem to be fragmenting. And so maybe your answer to Doug, his first question, is the same as maybe it doesn't make a difference that the US withdrew from NGFS if our policies don't reflect the spirit of it. Is that true? And if it's a simple answer of, yeah, I agree, then I have a follow-up question.
Thanks, Claude. My answer to this would actually be more similar to my second answer from Dave. So I hear you feeling a bit dispirited about the US leaving the NGFS, the Network for Greening the Financial System. And for those who are less familiar than Claude with the institution, the NGFS has been a really interesting organization that brings financial ministries and regulators and supervisors together to appreciate how they can move forward with climate-related financial policies and to better understand the risks. So a distinction here, the commitments that banks made under Net Zero Banking Alliance were their own voluntary commitments, and played a significant role, regardless of what they were designed to be. They played a significant role mostly in communicating what they were going to do or what they alleged they would do. The Network for Greening the Financial System is more of an educational, research-based organization. And so to that extent, frankly, it's a real shame for the United States themselves to not be able to participate and benefit from that. The Network for Greening the Financial System still has a number of other members that are participating, including Canadian financial regulators have been at the table for important work on, for example, what's your climate action plan, which is, more commonly called as a transition plan, to think about how to move those forwards and to work with global regulators to make sure that big financial institutions who exist globally can tackle things in an organized way. So my answer to you, Claude, would be not to necessarily be dispirited because, the education and research-based tools that have been happening through cooperation of global regulators and supervisors, I'm sure will still continue on climate-related issues and nature-related issues. And for the US's exit, it seems only to their own disadvantage. And one thing that you might hear from me, I've noticed in kind of my answers to Dave and Claude and the questions that you're asking in terms of, what's happening with the US moving away. There's still a lot of global action on climate change. And I don't mean that in a naive way of everything will be fine with the US leaving different types of climate commitments, but more in the sense that Asian economies, many European economies, a lot of actors globally are still moving forward with climate action simply because it makes sense and is economically more affordable to move to clean energy, economically sounder to build infrastructure that's resilient to climate damages. So a lot of this is still moving forward, again, regardless of verbal insults that may be hurled across our nearest border.
Thank you very
Mhm.
much. And I think I'll withdraw any request for a second question. I'll get back in the queue if there's time.
Okay. Okay, Barry, you're up. And then after that, I think it's John on deck. John Mayer.
Thanks, Julie.
There's an
Ooh,
echo there.
It sounds like a lot of echo.
Just put your question up on screen then.
Okay, it is up. Individual decisions, and you can see my question there.
I'll look or Richard, do you want to
Just a minute.
MC that out?
Just let me see if I can go back to oh, here. So what the question was what impact do sorry, we're going John Mayer here. Sorry, I got the wrong question here.
Am I still? Okay, sorry.
Just put it up on screen again, John.
I will read it. I've got it here. What impact do individual decisions have on financial institutions? For example, MD Management provides an option to opt out of fossil fuel investments. Still, Scotiabank is a major investment in fossil fuels.
Mm-hmm.
That's a good question that gets to a couple different layers, because you're saying, for example, if you have a fossil-free fund that's not investing in oil and gas infrastructure, it might still invest in a bank, which is providing significant finance and services to fossil fuel infrastructure. So I think that's a really great point to acknowledge. In terms of what impact does individual action have on shifting our financial system, it depends on who the individual is, for sure, and how big those dollar signs in the bank are. But generally, a more effective way is to shift the system as a whole through policy. And this means, it's certainly sensible to look at your own investments in this lens. But if we really want to move the whole financial system, sending a letter to your elected official, talking to senators who have engaged with the Climate Aligned Financial Act, that's a way to much more efficiently shift the whole system.
Mm-hmm.
It's kind of equivalent to recycling. Do I recycle? Absolutely. Do many of you recycle? I'm sure. But it will be much more effective in terms of mitigating waste to try and advance reuse at our whole industrial level, right? Shouldn't necessarily be a burden on individuals. And that's one other way that I often think about it. Finances are something that are stressful for many people, and it doesn't necessarily make sense for this individual burden to be on people. That being said, I think switching to credit unions is an incredibly excellent option, both for where they put their money and then also the governance of that, right? A bank is accountable to shareholders quarter by quarter. A credit union is accountable to its own members, which is a pretty cool governance model, which certainly changes the way they think and the way they allocate money. And that shows in the way that credit unions across the country make investment decisions and make commitments. They're much more, if you look at, for example, Van City or Desjardins, they have much more advanced climate commitments and climate related action.
Yes.
So in terms of individual money, I'd say, switching from bank to bank is kind of apples to apples, but to move it to a credit union is a good way to align with values.
I'm familiar
and then
with
at the higher
Desjardins.
level.
Yeah.
Oh, sorry, Barry.
I'm familiar with Desjardins' policy on not investing in fossil fuels. And I'm wondering if most Canadian doctors instructed MD Management to opt them out of fossil fuels, fuel investments, would that at least send a message?
Mm-hmm.
Absolutely. And that's another good point in terms of how you can act collectively, right? As individuals, I don't know about you guys on the call, but my bank account might look different than the highest net worth client at a particular bank. And that's often where, the more money has more impact. But if you look collectively at how do our pension funds impact this, how do the different assets that you hold collectively through institutions, where are those invested, then you're getting to bigger sums that can certainly have a more significant impact, both in terms of where the dollar is going, and then also in terms of the narrative that a financial institution is hearing about what's important and where do people want things to go.
Mm-hmm.
Those are great
Thank you.
ideas too, Barry.
Yep, thank you.
Okay, John, you're up. And then after that, Dave Pollock, you're on deck.
Julie, I don't envy your position trying to boost investment in renewables, given the market realities. I think renewables are typically slower returns than say regular, particularly fossil fuel based investments. Slower and lower. But in Canada, I think the question has to be as well, if you're dealing with Canadian bank investment in Canadian renewables, taking solar for an example, the capacity factor of solar installations in Canada is less than half of what they would be in the Southwest US, and perhaps much less if you wanted to put up solar panels in Iqaluit. First of all, it would be a lot more expensive to put them up there. Secondly, the output would be a third of what you would get with a similar installation in the US Southwest, and maybe half of what you get in around Red Deer. And I'm just wondering if that goes into it, that the output, not even talking about financial returns, but the energy returned on the financial investments is going to be less for solar. I'm not sure about wind, but certainly it would be for solar in this country, and that hurts the viability of these investments in Canada vis-a-vis other groups investing in renewables in better climate regimes.
So the first piece I'd point to in terms of the returns for oil and gas relative to renewables, there's lots of options for different kinds of renewables in Canada. Of course, I'm currently in Quebec, where there's a significant amount of renewable hydro energy, which runs our entire grid. And then there's also significant opportunity for wind, depending on where you are, or geothermal in Canada. So I'd add that as investment opportunity that a number of institutions have looked at, and that's less what I'm focused on. Although I'll highlight that one of the reasons that oil and gas companies in Canada are yielding returns, I think it's very important to consider the subsidies that those institutions and companies are receiving from the government, which have helped, make them profitable companies, both at the start when they were founded with very significant supports from the government. And then even now, last year they've received about $18 billion, and the government has given about $18 billion in subsidies to fossil fuel related companies. So that's a very important piece to understand in terms of the skewing of the market. And while the government is starting to look at more policies to support clean energy, I think it's a really great example to recognize that building new industry takes an all hands on deck approach. A lot of countries are starting to recognize that to modernize our economy in any kind of way, but especially to meet challenges of climate change, requires some coordinated planning and coordinated investment. So that's something that we need to see quite a bit more of in Canada. And that's not separate from where investments are going in the private sector. It's very much closely related.
Yeah, I think you're absolutely right. I think we need strategies and goals to encourage long-term investment, and I don't think we really have that. So, good point. Okay, thanks.
Thanks, John. Dave, you're up next. And sorry, I missed Art, but Art, you're up next after John.
Thanks, Richard. Julie, a comment first, and then a question. I would just say I was very involved years ago during the apartheid regime in South Africa in a campaign to try to get Canadian banks to stop loans to the government of South Africa. And I would say one of the things we found about the banks is they're very sensitive to where they think the public mood is going. And so, yes, I agree with you that one individual, composting doesn't change the world. But if you have an organized campaign, that involves institutions like Harvard withdrawing their funds or church bodies or NGOs and so on, labor unions, then I think it really does historically have quite an impact. So I think it's both the mobilization of the public, which helps to drive the public policy at the same time. So that would be my general comment. I wouldn't put all my eggs just in the policy basket, because sometimes even to drive the policy change, it requires policymakers knowing there's an aroused public that's very sympathetic. And in line with that, I was curious about two things. It used to be that pension funds would claim, oh, we have a fiduciary responsibility, to get the best bang for our buck for our investors. Is that still a block? Or are people now seeing the risk of climate change is so great that maybe they won't get such a good return? So I'm wondering about that fiduciary argument. And in line with that, I'm wondering with the Senate Act, the 243 on finance and climate change, has there been testimony by the Canadian banks? I'm interested in the kind of argumentation that they're making in response to that bill right now. Thank you.
Thanks, David. Super great perspectives. And certainly you can't separate what people want from policy. That's exactly what policy has to be founded on. And I think the movements that we see from corporations, should be more accountable, and in many cases still is responsive to collective movement on something. So I would say that's total agreement in terms of moving with all different types of levers, but that the only reason any type of policy change would even make sense is if people are showing that they want it, because that's what public policy is there to do. And that's what we should make sure, companies, including financial institutions, are responding to. So I would totally agree with that. And that definitely aligns with the question of fiduciary duty in terms of what are these financial institutions, especially pension funds, designed to do. A really interesting distinction is that in Canada, the fiduciary duty is legally understood as acting in the best interest of beneficiaries. A number of lawyers in Canada have done really incredible research over the past years to highlight how climate change is something that not only pension funds, but any board of directors should be thinking of as part of their fiduciary duty. That being said, it would be excellent to see clarity from the government, let's say our next finance minister, to say, yes, Canadian definitions of fiduciary duty to act in the best interest of your beneficiary does in fact mean that you need to think about climate change. That does seem pretty clear, but having that further clarified would be very welcome. Even just thinking of you asking the question now is good evidence of that being a value in terms of having it confirmed further.
Good. And what about the Canadian banks? Have they weighed in on this proposed new act?
Canadian banks have understood that CAFA would be very effective at helping shift investments out of polluting industries and into climate solutions, and they have testified generally against this type of policy. I'd point you to the Canadian Bankers Association's testimony on this. I think there are about maybe a dozen testimonies for the Climate Aligned Finance Act. I had the pleasure of speaking to the Senate, of course, in support of the bill as in my testimony, and the Canadian Bankers Association, which is an industry group. And so none of the banks spoke to it themselves, but they had, I believe they were invited but didn't speak, although I'm not 100% sure of that. The Canadian Bankers Association spoke about how they did not support further regulation on climate change. And I'd also, as a similar point to that, note that the banks themselves, their executives, were called and summoned to testify to another part of the government in the House of Commons. And they were questioned by the Environment Committee about why the banks were continuing to make investments that make climate change worse. You know, the impacts that those banks are having on our environment in harmful ways. And so the individual bank CEOs were called to talk about the impacts that they have on the environment, which is really, really interesting and quite positive to show that our parliamentarians are recognizing how the financial system engages with climate action in a variety of different ways. But in terms of the bank's appreciation for further policy, it's not a surprise based on how banks have historically acted to push for less regulation, which typically just highlights that it's all the more important.
Thanks very much. Appreciated your presentation.
My pleasure, David.
Okay, Art, you're up, and then after that, it's Jean. Sorry, Jeff.
Okay. Just so that you know, I've 9 years ago, I became my own financial advisor, and I did take my RSPs and made them self-managed, and I invested in property rather than in fossil fuels. It just so happens that property I happened to invest in was where I live. And this means that I ended up, in fact, getting a substantial amount of money from my RSP, which I promptly went and invested in my own residence, and made a microgrid, which includes solar and batteries and ground source heat pump, which itself ends up being an investment in that I am, and I bought EVs as well. This becomes an investment with an interesting return because I'm not buying gasoline, I'm not buying electricity, I'm not buying natural gas. And so that's sort of like an interest-free dividend that is coming in.
Absolutely. You get to save on energy after your front-end investment, your capital expenditure.
Right. And but some interesting things are happening, that there are other people that are often entering the transition quite independent of the banks. And this means that on the grid managers, there's increased demand for EV charging. There's increased demand for what's the name of it? The data centers, as well as for heat pumps that are coming in vogue, which means right now the grid managers are very busy delaying their transition off coal burning generation of electricity, and looking at bringing on more gas turbines to meet this demand while they try and build out some more of the renewable energy, primarily solar and wind, but including small nuclear reactors and finding small hydro and other ways to try and move forward on this. Do you see any way that the Canadian banking system or financial institutions can participate in this by encouraging, perhaps it's lower interest rates, maybe it is some other way to assist these individuals and organizations, because there's a lot of companies, by the way, who are doing this as well. You know, some of the heavy hitters like Microsoft and others are indeed taking this transition into their own hands.
Yes, so you're asking about really the grid in Canada and how we can ensure that is up to the specs we need it to be to electrify everything and move it to clean energy. This comes down to a couple of pieces. First of all, let me highlight on the counter side, the financing that our banks are putting towards oil, gas, and coal, and particularly towards the expansion of those pieces of infrastructure, is actually less through the equity investments, which is what we often think about when, to one of your colleagues' questions, people talk about divestment. A lot of it is through either financial services, where they're helping structure and arrange deals, or through debt. So through loaning to build new pieces of infrastructure. And when you're building a new piece of infrastructure, that debt piece, that loan, is super, super important. I mean, Art, you talked about taking money out, from your RRSP, which is, a capital amount that you can then start an investment on. Often when we're thinking about a big infrastructure, whether it's expanding oil, gas, and coal, or more positively for climate action, investing in upgrading our electricity grids, that's something that requires significant capital investment up front, but it's an investment, right? It's not just rogue spending, it's investing in the future. And if we think about how the banks have been participating in the polluting industries of oil, gas, and coal, which is a lot of financial services and arranging and loans, that's an area where, it could be important for them to participate in terms of grid upgrades.
And do you know if any of that is happening?
Well, again, I can point to the fact that their clean energy ratios, as it's called, the amount that they're investing into sustainable and financing sustainable and investments relative to polluting ones, is very low, typically less than $1 for clean relative to $1 on polluting. I'm sure that there are some activities on this, but it definitely needs to be scaled up. And again, to tie in previous colleagues' questions, this also relates to something that we would need to see more government policy and coordination and investment in as well, and some direction for.
Okay, good. I agree.
So,
thank you.
I'll read Jeff's question, and then Jean, you're on deck after that. So Jeff was wondering, he had to leave, unfortunately. So to the question of the possible role of individuals, he asked his investment advisor to primarily look at clean tech investments, but then he was told his job was to make him money and not to be socially or environmentally conscious. So that was sort of the answer he got. And then I just told him back in response, actually, I told my financial advisor a year or two ago to move over, move completely away from anything to do with fossil fuels. And I'm still making as good or better return than I did when I had anything to do with that was involved with fossil fuels or the banks or anything like that.
Sounds like, Richard, you're advising him to switch his financial advisor.
Oh, absolutely. That's the
response he got.
Yes, I am. I would say that. And the same thing, people, I think we don't realize that Norway, it's already over 90% renewable energy, and yet they have so much fossil fuel there, but they have done it. Their northern climate, they can do it, so why can't we? So, Jean, your question.
Was Julie going to make any response or no?
It sounds like that was more of just an update from the conversation, is how I interpreted that. So I'm glad to hear from you, Jean.
Okay.
And
All right.
after Dean, Ted is on deck. Sorry.
I have a fairly simple question, but a bit of a lead up. With all of the things that you've been talking about in terms of investments, it's the banks and the financial institutions investing in the companies that are doing things. And the question I had was, with the UK and the EU and some of the other countries with whom we have relationships, have put in this kind of investment policy or climate action policy. Have you seen an increase in the investments in renewable energies and other sorts of financial vehicles? Has it had the desired impact?
The European Union has put out research showing that more money has flowed to sustainable investments since they put in a number of policies encouraging that to happen. What I'd add to that, though, is that a lot of sustainable finance policy can still go further to make those movements happen at the scale and pace required. In terms of where we're at now, emissions have to decrease globally by about 50% over the next 5 years. 5 years is not very much time. I'm sure many of you have seen children grow over 5 years, and it happens in the snap of a finger. And we certainly don't want our emissions to grow over that time. So a lot more needs to happen. And that's why pieces like the Climate Aligned Finance Act take the best practices globally, right-size them for Canada, but then also look at what more needs to be done. Because more does need to be done in terms of climate-related financial policy relative to what we've seen started elsewhere and not yet started even in Canada.
Okay, thank you.
Okay, Ted, you're up, and then after that is Claude again.
Thank you very much. By the way, that was wonderful, Julie. I would very much like to talk to you again about some of that we're trying to export as well through the Club of Rome, but that's for another day. Way back when I worked with the Brundtland Commission, we put a lot of stock in the possible application of the insurance industry as the vehicle to scare people into doing the right things about climate change, about any sustainability issues. And certainly in some countries, we've been able to see some very major changes happening now, really often out of surprise. For example, you can't get insurance right now in parts of the States like southern Florida. No one can afford it. I talked to a friend last year, and her insurance for a small house went from $3,000 over up to $38,000 a year in 1 year. Now, so there are means, I think, of getting the messages through. But we had great hopes for the insurance industry. Why did that not happen? And are they now involved in any way in Canada?
Thanks, Ted. That's devastating to hear about insurance prices going up from $3,000 to $38,000 in 1 year. That's simply unaffordable. And it's a really big problem if insurance companies are investing in things that pollute and make climate change worse, and then transferring those costs to individuals who can't necessarily afford that, who probably can't afford that. That's a really big problem in terms of consumer rights, in terms of environmental justice. So what you talked about, Ted, about places becoming uninsurable, either where insurance becomes unaffordable, or where insurance companies pull insurance options from that region.
Yeah, they're both
huge problem.
Yeah,
it's a huge problem.
Even in Canada, we are denying insurance to people who insist on rebuilding in floodplains after they've been flooded once or twice. So those messages do happen in Canada, but I'm just wondering if there is more potential to mobilize the insurance companies along with banks and others as a vehicle to get the message through.
Absolutely. Insurance companies themselves should be doing a lot more. I'll also raise this to a bigger challenge. What you've talked about is a form of capital flight, where the risks get more significant, it becomes less affordable, and then there's no capital available for that. And I think a really important analogy or similarity to acknowledge is that there are certain communities within Canada that are becoming uninsurable, that are experiencing capital flight, where, for example, you own a home in a region and you can no longer afford or access insurance. You need to invest in a particular region, but you're experiencing higher climate damages. So, the opportunity to get that money is becoming much more difficult and more expensive. That's also happening globally. And this is very important to think about in terms of environmental and climate-related justice. Countries, the wealthier, high-emitting countries, are those who, have historically industrialized, and the ones who are dealing with the biggest brunt of the climate crisis, even what we're dealing with here at home in Canada, globally, a number of more vulnerable countries have experienced much higher damages. They've contributed the least emissions to climate change, and they are experiencing a higher cost of capital. It's more expensive for them to make investments or to access insurance due to problems they haven't caused. So that parallel is really important to keep in mind, where the most vulnerable communities, whether at home or globally, are often those who have contributed the least to the climate crisis, whereas more industrialized, historically emitting countries or large financial institutions have continued to contribute to polluting sources. And that piece of environmental justice shows the solutions that we need to really urgently move on, both in terms of protecting those vulnerable communities and shifting the actions of those who are helping to contribute to the harm.
Thanks. I'm glad I asked that question.
Okay. So, Claude, is there you done, Ted? Sorry. Claude, you're on.
Okay, thank you.
And then Dave, you're on deck.
A recent report by the actuaries at the University of Exeter suggested that a possible 3-degree C global temperature rise by 2050 would result in very high mortality. And they used a very interesting phrase, a permanent loss of capital. And this was recently reviewed by Paul Beckwith in one of his, I put the link in the chat in case you want to refer to that. But he is a very frequent presenter here at CACOR, and I think he's a member. So my question actually is, it's hard to, we've all seen bubbles, and then the value seems to come back into the marketplace. And I think what the actuaries are trying to suggest is that at some point of mass mortality, you might have a situation where the confidence never comes back to rebuild that capital, if capital is indeed partly in our head as a confidence that the money will be there when I need it. So is that enough food for you to kind of improvise from? What does late disaster look like on the financial side of things?
That's a fun question, Claude.
Very unfair question, and I apologize for asking.
I wouldn't see
but
it
this
that
is
way at all.
CACOR.
I always like a research-based question. And I've seen some of those analyses. So one piece that's, I think, really quite important is to counter the idea that climate action costs more than climate damages, which of course it doesn't. It's the inverse, right? People often think about the short-term costs of climate action. And many economists underestimate the long-term costs of climate damage. Some studies from Network for Greening the Financial System or from the International Monetary Fund point to global GDP loss as between 3% from climate disaster, or maybe even 18% is the highest I've seen. But that's quite baffling to consider the underestimates when we've seen so many damages exceed scientific expectations already and create so many harms for people, communities, and the economy. So the low ranges of GDP loss are quite baffling. And well, I haven't redone their studies myself. I think many would feel quite comfortable in saying probably inaccurate and low estimations. So what you're saying about permanent loss of capital is consistent with some of the concerns that we've seen from other global scientists and energy economists. For example, the Intergovernmental Panel on Climate Change, the group that comes out with the most seminal climate research and aggregates global climate research, has pointed to $11 trillion in stranded assets, which I talked about earlier, of investments, moving too slowly on the climate transition over the next decades. So that's a huge amount of money. In terms of that being a permanent loss of capital, I think what you're highlighting points to more global disorder, right? You said the word mortality a few times, which isn't often something that a financial institution will think about in making their analysis or calculations. So what you're pointing to, Claude, is, really significant economic disruption and destruction at the sense that, is scary beyond the number.
Okay, thank you for those comments.
Okay, Dave, you're up, and then James Cohen is on deck.
Great, thank you. Okay, try not to make this a slider. It's two-barreled. What do you make of the former finance minister's last-minute $20 billion loan to TMX? And what of recent proposals for an Energy East pipeline revival?
Yeah.
Well, I've talked about how we need to invest at the government level more strategically to help make sure that we're cutting emissions and building an economy that works for people and that helps advance climate resilience. And that project has put a lot of taxpayer money into something that has shown a lot of bad turns, right? That's not the type of infrastructure that we should be investing in for long-term resilience or long-term climate action. Not to mention some of the governance principles that were passed through by, I think, Dave, you were noting that was done kind of relatively quietly right at the end of a mandate, when I can tell you, as someone who's worked on climate-related financial policy and tried to move things forward, there are a number of things that were ready to be moved forward that weren't at the end of that term. So the priority of moving something that is damaging to climate action rather than helpful to climate action is not what we want to see. And in terms of further pipeline infrastructure, I think my answer would be pretty much akin to what I just said in terms of the infrastructure that we actually need to invest in. Some of your previous colleagues were talking about savvy investments to modernize our electricity grid or other pieces like that. So that's where things should be going instead.
Okay, thank you.
Well, it occurs to me that we didn't give up on the Stone Age because we ran out of stones. And we won't give up on oil because we run out of oil. We need to give up on oil because we can do it better.
Yeah.
Well said.
Yeah, that's right. So, James, go ahead.
Audio, here we go. Yes, I was just wondering if the panel and speaker here generally felt, I was just wondering if the panel and the speaker here generally felt that a solution to many of these issues would be some form of global authority, which actually had the ability to enforce regulations or laws or policies that dealt with these and other issues.
Thanks, James. That's making me think of another James Lovelock, who is a really clever scientist who invented who popularized the concept of the Earth as a living organism called Gaia. And he advocated for a bit of an authoritarian lead to get climate action done, and then we could move back to democracies. My perspective is that most of the good climate solutions come from the bottom up. Most of the good community solutions are the ones that have taken us forward, and that it's really important to build the society that we want to live with at the end of our climate solutions, to do that as our process as well as the outcome. So all of that to say that having coordination globally, super smart and effective. That's what groups, some research groups have been doing to help share information across different jurisdictions and regions, but making sure that solutions are responsive to what people actually want to see is the best way to make them successful and correct.
So like Operation Lockstep of the 2010 Rockefeller report sort of thing?
I'm not sure I'm familiar with that precise reference.
Well, it was in the 2010 Rockefeller report, they talked about how to create sort of influences on local governments so that these sorts of policies could be made to be enforced locally, but with slight adjustments from region to region to account for culture or how they would view it. You'd have to read it, I guess. So
Yeah, I think we have to wrap up in just the next couple of minutes.
Yeah.
But
No, I think
overall to your question, James, I'd say that you need to tailor the solutions. We need to tailor the solutions to what actually makes sense for the places that they're affecting.
Okay, John, you've got the last question.
Oh, thank you. I've observed in politics that positive often works better than negative. Going after fossil fuel companies is something that certainly members of CACOR do with great enthusiasm. On the other side of the question, are the financial requirements of corporations in the business of renewable energy and energy efficiency being met? And do they secure terms from the banks as favorable as the fossil fuel companies do?
Thanks, John. So the short answer I'd give here would be the same as I shared for one of your previous colleagues' question, which is it's important to recognize how public investments affect private returns and to recognize the very significant fossil fuel subsidies that have helped build up those companies and industries and, puts a bit of a finger on the scale in terms of how things are shaking out. So economics of clean energy are impressive and growing and should be further bolstered by the right public investments too.
The federal
Thanks,
government
John.
and some provincial governments have offered grants, subsidies for the purchase of electric vehicles, which is on the right side of this equation. Do you anticipate that? No, that's not a fair. I was going to say, what's the next government going to do? But we don't know whether it's going to be Mr. Poilievre.
That depends on how everyone here votes, I suppose.
Carney,
Okay.
do you think, if this is not a suitable question for you to answer, if the members of the Liberal Party of Canada choose a former banker and UN climate person, do you anticipate any difference in the federal policy scene that would favor renewables, energy conservation, and not do what one of the other candidates for the federal leadership did, support a $20 billion pipeline?
Mm-hmm.
Well, thanks, John. I think given that we have to wrap up at this moment, that will be a question that hangs over the future, and we'll see how it goes. We'll see how it shakes out.
We can
Okay,
do that
Ted.
when the video's turned off.
Okay, so
Thanks
Ted,
so much for having me, though, for the conversation. It was a pleasure
Ted,
to
do you want
join.
to thank the speaker?
I would love to thank Julie. I thought this was wonderful. And there was a little bit of good news today. Maybe we can debate whether it's good or not, where one of our candidates said that we are about to sign to put a rapid rail in, all electric, from essentially Toronto to Quebec City. That may make a difference, and that would, I think, be on the positive side of the register relative to building more pipelines. So that is for another day. Anyway, thank you, Julie, for a lot of wonderful observations on how the system can and possibly could work to make us a successful country and a nice place to live. So I'd like to thank you again for coming, and certainly be happy to invite you back in a little while to tell us more as things evolve.
Mm-hmm.
Wonderful.
So,
Well,
again,
thanks so
thank you
much,
very
everyone, for
much,
the
and I'd ask
conversation.
everyone to thank you for a wonderful session.
My pleasure, Ted.
Okay, and here comes the commercial. For those of you who do not belong, it's time to pay your dues. We are establishing a brand new system by which, through Wild Apricot, you can manage your own acquisitions to our program. You can help us pay for the capacity to deliver wonderful talks like this. And we're up to 233. We hope to make it to 500 at some point, and we'd like you to help us do that. So thank you again. Please become a member. Please, if you go on and share this material, make sure that you are, in fact, a subscriber. And we shall see you next week when we have another wonderful presentation. So thanks again.